Introduction. In the double entry system of accounting, every transaction affects at least two accounts, one debit and one credit. However, after numerous entries, it becomes necessary to check whether the ledger accounts are in balance before preparing financial statements. This is where the trial balance plays a critical role. This module explains how to prepare a trial balance, the types of errors that may arise, and how to detect and correct them effectively. What is a trial balance? The trial balance is a statement that lists all ledger account balances, both debit and credit, on a particular date to verify the mathematical accuracy of the double entry bookkeeping system. Purpose of a trial balance: confirm the arithmetical accuracy of ledger accounts, ensure total debits equal total credits, serve as a base for preparing final accounts. Format of a trial balance: trial balance of XYZ Enterprises as at 31st December 2020. Account title: debit Naira, credit Naira, cash 100,000, accounts receivable 200,000, equipment 500,000, accounts payable 150,000, capital 500,000, sales 250,000, purchases 180,000, rent expense 50,000, total 1,030,000, 1,030,000. If both columns agree, it suggests that the ledger postings are arithmetically accurate.
Steps in preparing a trial balance. Post all transactions from journals to the respective ledger accounts. Balance each ledger account. Find the difference between debits and credits. List all accounts with their balances on a trial balance form. Separate debit balances from credit balances. Add both columns. They should match.
Limitations of a trial balance. A trial balance confirms only arithmetical accuracy, but not absolute correctness. There are many errors that may not affect the trial balance total, and they can go unnoticed. Types of errors in accounting. 1. Errors not affecting the trial balance, undetectable by trial balance. In this course, we will be using type, example, and explanation in our table. 1. Error of omission. A transaction not recorded at all, buying supplies but forgetting to record it. 2. Error of commission. Posting to the wrong customer account, debiting Mr. A instead of Mr. B3. Error of principal. Wrong class of account used. Treating a capital expense as revenue 5. Compensating error. Two unrelated errors cancel each other. Overstated revenue and overstated expense 6. Error of original entry. Wrong figure recorded in journal. Wrote 850 Naira instead of 580 Naira in both sides. 2. Errors affecting the trial balance. Detected easily. Type explanation. 7. Single entry. Only one side of a transaction posted unequal entry. Debit and credit amounts differ 8. Wrong side entry debit instead of credit or vice versa 9. Arithmetic errors, mistakes in adding totals. Error detection techniques. Recheck all journal entries and postings. Compare ledger balances with original documents. Cross-verify totals of each account. Use control accounts, e.g., debtors, creditors control, for cross-checking. Divide the difference in the trial balance by 2 or 9. If divisible by 2, possibly a debit posted as credit or vice versa. If divisible by 9, possibly a transposition error, e.g., 534 instead of 543. Correcting accounting errors. To correct errors, use a rectification journal entry depending on whether the trial balance is affected or not. A. For errors not affecting the trial balance. Example: error of principal. Paid 10,000 Naira for a motor vehicle and debited to repairs expense. Correcting entry: Dr. Motor Vehicle 10,000 Naira. Repairs expense 10,000 Naira. To rectify motor vehicle wrongly recorded as repair. B. For errors affecting the trial balance. Example: undercast sales by 5,000 Naira. Correcting entry: Dr. Suspense account 5,000 Naira. Sales 5,000 Naira. Suspense accounts are used temporarily to balance trial balance errors until corrections are made. Suspense account explained. A suspense account is used when the trial balance doesn't balance and the accountant is unsure of the source of the error. Temporary account until error is corrected. Once identified, adjusting entries remove the balance in the suspense account. Trial balance adjustment and reconciliation. After correcting errors, post the rectification entries to the appropriate accounts. Rebalance the accounts. Re-prepare the trial balance. Confirm the suspense account is cleared. Trial balance and financial statements. The trial balance forms the basis for the preparation of trading and profit and loss. Account balance sheet. Cash flow statements indirectly. Only accounts with valid balances from the trial balance are transferred to the financial statements. Summary. The trial balance is an indispensable tool in accounting that ensures ledger accuracy and helps in preparing financial statements. However, it doesn't catch all types of errors. Accountants must therefore be skilled in identifying, tracing, and correcting errors using rectification techniques and suspense accounts. A reliable trial balance enhances transparency, accountability, and efficiency in financial reporting.